Hey everyone, welcome back to Corporate Decoder, the place where we unbox the secrets of the corporate world. And today we're diving into FASTENAL Company's latest financial report. And let me tell you, it is a masterclass in managing growth and navigating tricky economic waters. So, what is the big picture here? FASTENAL, a giant in industrial and construction supplies, dropped their Q3 report for 2025, and they re-showing us how to keep growing even when the economy is a bit of a roller coaster. Think of them as the sturdy backbone of industry, keeping things running smoothly. Now, let's get straight to the numbers that matter most. FASTENAL is showing us some pretty solid performance, especially when you look at how much sales are up. For the 3 months ending the 30th of September 2025, their net sales jumped 11.7% compared to the same time last year, hitting $2,133.3 million. That is a huge jump, meaning more customers are buying more stuff from them. When you look at the daily sales rate, it is up too, showing consistent growth throughout the quarter. What is even better is that their gross profit, which is what is left after they pay for the goods they sell, also saw a nice bump of 12.5%, bringing it to $965.8 million. And as a percentage of sales, it actually improved slightly, which is impressive. This tells us they not just selling more, they also managing their costs effectively, which is exactly what you want to see. Now, let's talk about their selling, general, and administrative expenses, or SG&A for short. These are the costs of running the business, like salaries and marketing. The good news is that as a percentage of net sales, SG&A stayed steady at 24.6%. Even though they are spending more on their people and operations, their sales growth is keeping pace, which means they are very efficiently managing their expenses. When you put all that together, their operating income, which is the profit from their core business operations, shot up by 13.7% to $441.5 million. This shows a really strong business engine. And the bottom line net income saw an even bigger jump of 12.6%, reaching $335.5 million. This translates to diluted earnings per S-share of $0.29, up from $0.26 in the previous year. That is a nice boost for investors. Looking at their workforce, it seems like they're reinvesting in their people. They increased their full-time equivalent employee headcount by 2.7% over the last year, especially in selling and supporting roles, which makes sense as they pushing for sales growth. Interestingly, their number of physical branch locations has slightly decreased, actually down 0.4%. This suggests they might be optimizing their physical footprint, perhaps focusing more on efficiency or digital sales channels, rather than just opening more stores. But here is where it gets really interesting. FASTENAL is heavily investing in technology like their FMI devices. These are basically smart vending machines and inventory management systems. They've seen a 5.5% increase in these devices over the last year, showing they are serious about bringing high-tech solutions to their customers. And it is paying off. Sales through their FMI technology are up by a massive 17.7% for the quarter. This demonstrates that their investments in technology are directly translating into increased sales. They are selling more through these digital solutions, which is driving a significant portion of their growth. Even with a slightly sluggish industrial production environment, FASTENAL's fastener business is outperforming. They attribute this to better product availability and smart pricing strategies. They're also seeing strong performance in safety supplies, a testament to the ongoing demand for personal protective equipment and their success in sectors like data centers. Their original equipment manufacturer fasteners are showing a strong 15.9% daily sales rate increase, which is a really positive sign, especially compared to a decline last year. This suggests they're winning business from manufacturers who are building new products. The non-residential construction market is also showing improvement, with sales growing for the second consecutive quarter. While it is not booming yet, it is a positive trend for a sector that is crucial for industrial activity. And when it comes to customers, their contract sales are really the engine here, growing by 13.2%. This shows they are successfully locking in and expanding business with their larger, more strategic clients, something that gives them a stable revenue base. Let's talk about the money flow. Their cash flow from operations is robust, increasing by 30.3% in the third quarter compared to last year. This means they are generating a healthy amount of cash from their day-to-day business operations. Investment activities, meaning money spent on things like new equipment and facilities, saw a slight decrease of 1.9%. This is interesting because they are still investing investing, but perhaps more strategically, focusing on areas that yield the best returns, like their technology initiatives. On the financing side, cash used increased by 33.4%. This is mainly because they are managing their debt more actively, paying down borrowings from previous periods and returning more capital to shareholders through dividends. Fastenal seems to be in a good financial spot. Their debt levels are manageable and they are generating enough cash to cover their investments, operational needs, and return money to shareholders. Now, let's look at the bigger picture and what this all means. Fastenal is really demonstrating a smart business model. They are not just selling products, they are selling solutions. Their aggressive push into technology with FMI devices is clearly paying off, making them more indispensable to their customers. This focus on providing value beyond just the product is a key differentiator in the competitive industrial supply market. The slight decrease in physical branches while increasing technology adoption and sales is a smart move in today's world. It shows they are adapting to changing customer behavior and market demands. They are also managing their costs well, ensuring that their sales growth translates into true profitability. A potential area to watch is the continued strength in contract sales, which is great for stability, but it also means that trends in non-contract sales, which are more volatile, still need careful monitoring. The global economic uncertainties mentioned in their report, like tariffs and inflation, are real risks, but Fastenal's diversified customer base and focus on market competitiveness seem to be insulating them from the worst effects so far. In a nutshell, Fastenal is showing us that even in a challenging economy, a company that invests in technology, customer relationships, and efficient operations can continue to thrive. They are not just surviving, they are strategically growing. Alright, that is our breakdown of Fastenal's latest filing. What is your take on these numbers and what they signal for the company's future? Are you impressed by their tech investments, or do you think the economic headwinds pose a bigger threat? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really does help us out, and subscribe for more deep dives into the world of corporate finance. And hey, we've got a fantastic community over on our Discord server full of people just like you dissecting these reports. You can find the link in the description. Thanks for watching, and we'll see you next time on Corporate Decoder.